The Channels 24 app means you'll always be in touch with the news. Get the latest local and international stories on the go. And there's our social media platforms for news from around the world. Watch the news live and play videos that matter to you. You can also check the Eyewitness section to report events around you. Just click on the Eyewitness icon and follow the instructions to upload your content. Channels 24 app, the news at your fingertips.
And it's another week on Business Morning. Welcome to the program. I'm Ladi Williams.
And I'm Chimeze Obi Iwago. Thank you for joining us. All right, let's get the show started with some of the major highlights last week, both on the global economy and domestic economy. We'll begin with that of the global economy, with the market. We're braced for a sharp decline in UK growth for November, with a consensus estimate of minus 4.6% in the end. GDP did contract, but the decline was more moderate than anticipated at minus 2.6%. In Germany, data showed the economy shrank by 5% in 2020, and economists at Deutsche Bank say with the level of drop, the economy has proven to be more resilient than expected. The bank retained its plus 4.5% GDP forecast. Again, the International Air Transport Association, in its economic chart for the week, explained that ticket purchases rising towards the third week of December reversed in the same month. This development, it says, would impact travel as well as revenue for airlines in 2021. According to the data, there will most likely not be any significant improvement in passenger volumes in the near term. Now, in the U.S., President-elect Joe Biden on Thursday unveiled the details of a $1.9 trillion coronavirus rescue package. Some of the details of the plan include direct payments of $1,400 to most Americans, increasing the federal minimum wage to $15 per hour, and extending the eviction and foreclosure moratorium until the end of September. Meanwhile, economic analysts say Biden's huge stimulus package, coupled with China's accelerated recovery, is a key factor to global economic recovery.
Very interesting there on the global scene. But on the domestic scene, data from the central bank showed the top 10 non-oil exporters in Nigeria exported $57.74 million in goods in August 2020. The amount earned by these top 10 exporters declined by minus 22.8% from $74 million worth of goods in July to $57.74 million in goods in August 2020. The top three were Olam, which exported cocoa beans, cashew nuts, and sesame seeds to Turkey and China, and Starling Global and Ideal Limited exported cocoa beans to Malaysia. The third major non-oil exporter was Dangote Cement PLC, which exported Dangote Portland limestone cement to Togo and Niger Republic. Data from the Association of Nigerian Electricity Distributors showed that electricity consumers paid 362 billion naira out of the 520 billion naira billed by distribution companies in the country in the first 9 months of 2020. This represents a default of 158 billion naira, 30.38% of energy billed. Egbe and Shiro output hit a record high on Tuesday, January 12, 2021. Egbe output rose from 721 megawatts to 913 megawatts. Shiro hydro power plants generated a record high of 554 megawatts. It's interesting.
Yeah, and of course, Nigeria's inflation rose there by 15.75% year-on-year in December 2020, which is, of course, 0.86 percentage points higher than the rate recorded in November 2020. The composite food index rose by 19.56% compared to 18.3% in November 2020. And of course, that headline inflation has much higher than analysts expected. It is almost 7% above the upper limit of of the CBN inflation target range, which is 6.6 to 9%, bridging the average inflation in 2020 to 13.21%, up from 11.39% in 2019. Now, when you look at the core inflation, that is inflation less seasonalities, it increased sharply by 0.32% to 11.37% compared to a reduction of 0.09% in November. Now, this indicates that the spike in headline inflation is not driven by seasonal factors alone. Perhaps we may be right to say that the continued rise in inflation is due to the combined effects of exchange rate pass-through, higher logistic costs, electricity tariff hike, and so on. So to talk more on this, Tilewa Adebajo, CEO, CFG Advisory.
Yeah, and good morning to you and Chimeze.
Yeah, thank you for joining us. So the inflation data for December revealed a disturbing trend. Apart from being the highest headline inflation in 37 months, we saw all baskets increase, especially the core inflation. What would you say is responsible for this situation, which is now approaching what economists call galloping inflation?
Yes, galloping and indeed runaway inflation. The key issues we have here is the fact that we have to understand that in Nigeria, the inflation we have is not demand pull, which is the classic inflation of too much money chasing too few goods.
Yeah.
Our inflation is cost push inflation, which is driven by prices. The key culprit here is food prices. Food inflation is already close to 20%. I think it's 19.98 at the moment. I think that's what is most disturbing of those numbers. Then fuel prices are also going up, which is also causing inflation. And of course, utility prices, price of electricity has also gone up. So these three factors are what is driving inflation. And we're looking at the trajectory of inflation, going higher and higher. So that is really where the challenge is. And I think the most disturbing trend that I've seen from these numbers is the fact that the significant difference that you used to see between rural and urban inflation, that gap is shrinking. Maybe there's only 1% now in terms of what is happening in rural areas and the urban areas.
Yeah. Now, the CBN inflation range has a floor of 6% and a ceiling of 9%. This rate of inflation of 15.7% and food inflation of 19.56% means that the mandate of maintaining price stability is failing in spite of the interventions. For instance, we had the Anchor Borrowers Program and, of course, lending to job-elastic sectors. What should the CBN do now that it looks like the economy may be unraveling?
Well, I don't know if the CBN can be able to control this because what has been driving food inflation has been the security situation in the northwest. The northeast of this country, which is traditionally the food basket. So not only do we have a food security issue, but of course this is also a national security issue, and we can now begin to see that it is impacting on the economy negatively. Then, if you add the fact that we had closed our borders. All these factors are what is exacerbating the food inflation prices. And of course, as you've said, with all the money that we have spent on agriculture and trying to look at self-sufficiency, for food prices to be at this level is rather disappointing. So a lot of these expenses might be central bank's control. So that's what we need to look at. But I think CBN has to look back into time. Because there was a point in time where inflation was 19% and they reduced it to 11%. But, we've also had some economic shocks with the COVID and the End SARS protest had significant. And we should all understand now that this economy is actually now in a recession.
Well, the CBN on numerous occasions has reiterated its stance that inflation above 12% is growth retarding. Today, we're seeing interest rates at less than 1% and inflation above 15%. Is it possible to achieve the anticipated recovery in this situation? And how do you think investors will react to this?
That's a very interesting question because, as you've said, as far as the financial markets are concerned now, real rates are negative. But don't forget that we had a problem before where we were in treasury bills were close to 18%. But you see, government now is spending close to 85 to 90% of its revenues to service debt. So government can no longer afford to place treasury bills at 18% because they can't afford those payments. It's putting a lot of pressure on the financial system. So right now, real rates are negative. Last year, we had significant disintermediation between the bond markets, and most money was now moving from treasury bills and government bonds and government securities into the equities market. So towards the fourth quarter of last year, you saw a rally in the equity market. So that money that left the treasury bill markets went into the stock market, and you saw that rally. But there's only a limit to which the stock market or our equities market can absorb those funds. So right now, most of this money is now going into the real sector of the economy, so to say. And with the credit policy that the central bank has put with low interest rates, let's hope for once the real sector will benefit from these low interest rates, and that can be the stimulus to growth. However, I think we have an MPC meeting coming up to see what the central bank does.
Yeah. Okay, just as you did mention there, the FGN debt levels are now at above 32 trillion naira with a foreign currency component in excess of about $34 billion. Recently, the federal government said it intends to scrutinize its overdraft and part of its ways and means advances at the CBN. Some analysts put the overdraft level at 12 trillion naira. What will the effect of this measure, what will be the effect of this measure on interest rates and, of course, inflation in the first quarter of this year? And is this an answer to the stagflation?
Well, clearly, I think we have challenges, but in a recession, the primary focus right now must be growth, how we should get out of this recession. So if the central bank starts to think about jacking up rates, it will only be counterproductive to growth. You will just worsen the recession. So I think it's maintain status quo right now and let those funds begin to let's begin to see the effect on the real sector. I mean, their own predictions is that we'll be out of the recession first quarter of this year. So let's see how that pan out. We have to wait and see, and let us see if we have the policies in place to take us out of the recession. Now, the fact that I'm not quite sure the figure you quoted, but 12 trillion overdraft with the central bank. The fact that the federal government is relying strictly on the central bank for financing its deficits in itself is very disturbing. And one has to be very careful because, as you know, you have a lot of CRR funds from the banks that the central bank has sterilized. And now the federal government of Nigeria is beginning to crowd out the private sector as the largest borrower in the economy. The private sector can. So we really need to watch this very, very carefully and hope that a lot of the CRR funds that have been sterilized by the central bank is not what the central bank is using to finance government, because the banks don't pay any interest on those funds. So we need to really understand and see some transparency in how that is going. It's not, it doesn't look good, but we need to see our way out of this.
Well, looking at the exchange rate, typically currencies in high inflation countries tend to depreciate or weaken relative to those in low inflation economies. The naira is currently trading at 475 naira in the parallel market. What will happen to the naira with this level of inflation if nothing is done about the artificial low interest rates in Nigeria?
Well, I think what is very important is that what we tend to underestimate in Nigeria is this diaspora funds that are coming. People talk about diaspora funds coming in maybe close to 25 to 30 billion a year, which is close to 80% of the federal government's budget. So this is a significant amount of money. As you said, this money enters in the parallel market because that is where the market is. The central bank over the last 4 years has the devaluation of the naira is close to 120%, which doesn't speak very good. of the currency management. And I think it's a very simple. All that the central bank needs to do is to give us a single window, one single window, and let most of these diaspora flows be transparent. As you can see, had made a U-turn in their policies, and they had liberalized all the domiciliary account operations to ensure these diaspora funds come back. So you don't put policies in place that will encourage the parallel markets. Let there be one single market window, and I believe me, the naira will find its level. At a point when oil prices are high, then we need to revalue the naira, and that's what we need to do. Not only do we need to have one window, but we need to move away from a static naira, so that if oil prices go up, then the naira should appreciate. And if oil prices go down, then the naira devalues. So if the prices are going up, it needs to go up and down, not just continue devaluing the naira. We need to move away from that static exchange rate mechanism and move to a single window, and the naira will find its level. I don't have any doubts about that.
All right, thank you very much, Mr. Adebajo, for your time. We always appreciate your time on the show. Be well and stay safe. Okay, the Central Bank of Nigeria late last year intensified its efforts to address money supply growth, rising inflation and forex scarcity by issuing a new guideline on diaspora and other remittances, which will allow beneficiaries to receive their inflows in foreign currency. This is expected to encourage inward remittances and increase forex supply. World Remit, an online money transfer business that provides international money transfer services in more than 50 countries, says it has become the first cross-border payments business to make it possible to send money from countries including the United Kingdom and the United States so that it can be received in US dollars in Nigeria, both for cash pickup collection and inter-bank account. Our the country director, Benga Okejimi, joins us next. Thank you for joining us, Mr. Okejimi, and Happy New Year to you.
Me?
Now, the Central Bank of Nigeria last year directed that international money transfer operators in Nigeria begin remittances payouts in US dollars. How would you explain this in a layman's term?
Thank you once again for having me. From a layman's perspective, this simply implies that all remittance transfers to Nigeria via international money transfer organizations like World Remittance will now be paid out in United States dollars rather than the local currency naira. The objective is to ensure that recipients get fair value for their transfers, which will also help to increase USD dollar supply at the retail end and ultimately encourage appreciation of the naira.
Anyway, some IMTOs resisted the CBN's directive. I'd like to know how World Remit responded to this.
As a matter of fact, World Remit was the first international money transfer organization to implement the CBN directive globally, as we began USD payout immediately after the announcement. We have been at the forefront of digital transformation in remittances with a focus on financial inclusion. However, we appreciate that some of the countries where we operate are actually cash reliant. So as a digital company, we were able to innovate and roll out the service in Nigeria without much disruption to the satisfaction of our many customers.
Now, before the USD payout, how were remittances transferred in the past?
Well, USD payout is actually not new to Nigeria. It was actually discontinued sometime back in 2013 by the central bank. However, back then it was a dual currency policy where recipients could choose either Naira or US dollars. Unlike this time around where it is strictly US dollars that banks are permitted to pay to recipients.
So, be it Naira or USD, how will customers and the economy benefit from this directive?
Thank you very much. Customers will get fair value for their transfers, as I'm sure you will agree with me that $100 in the United States is the same thing as $100 in Nigeria. The customers will then have a choice between changing this currency in the bank or from the bureau, the BDCs. In terms of the economy, it improves the retail supply of USD with the objective of stimulating local currency appreciation.
So how would you assess USD payouts in comparison with what it used to be before?
Okay, World Remit have several partner banks in Nigeria that pay out USD to recipients. In fact, we have the largest bank payout network for transfers to USD bank accounts in Nigeria as we speak. We are continuously adding to the network by onboarding more partners to make the service available to customers. The central bank has also pledged adequate support to facilitate the supply of USD notes.
Currently, who are your financial partners in USD payouts, and are you looking to get more partners?
We have several at present. We have Access Bank, Guarantee Trust Bank, Fidelity Bank, First Bank, First City Monument Bank, FCMB, Union Bank, UBA, Polaris Bank, and Zenith Bank. Of course, we are discussing with some other partners to broaden our cash payout network. The extensiveness of the network is actually important for CPU payouts. So we understand that fact. That is why we are also in the process to onboard more partners to actually widen the network.
So how are you working with other players to ensure that there are sufficient foreign cash reserves for remittances?
We appreciate the availability of USD notes is central to the success of this policy. The CBN has confirmed to us that USD notes are readily available for supply to all banks. For our own part, we support the banks as much as we can on the importation of USD notes and provide them with feedback when customers complain about non-availability of US dollars. So basically what we try to do is to ensure that banks have United States dollars in their vault in the right mix, because it's also important that they have the lower dollar bills and every available bill, so that customers will not be left stranded in the collection of their funds.
And when it comes to receiving funds from abroad, you know, Nigeria has so many limitations out there. How is World Remit helping with this?
Okay, you know, according to the World Bank, Nigeria is the biggest remittance recipients in sub-Saharan Africa, with a diaspora standing of about 17 million and growing. There is a huge potential for remittances to increase over the coming years. Remittances have also contributed to financial inclusion, helped to bridge gaps in forex, and assisted households in paying school fees, electricity, and medical bills. World Bank also said remittances account for approximately 6% of Nigerian GDP and even exceeds receipts from oil and gas revenues. So basically on our part at World Remit, like I mentioned before, we are a digital innovator. We are seeking ways to create opportunities for our customers to ensure that they receive their funds at a convenient, safe manner and at a very reduced cost. That's our ultimate objective. We seek to create opportunities for our customers. Just last year, we embarked on an entrepreneurship program, which seeks to reward some customers in Nigeria to help them to improve their businesses and actually bring to life their new ideas. So World Remit is actually collaborating with the Nigerian government to ensure that remittances continue to play a huge part in the development of the Nigerian economy.
Okay, that's good to know. Since World Remit commenced business operations in Nigeria, how would you assess the market in terms of remittances and its impact on the country's economy?
Yeah, as I mentioned, remittances is actually a huge driver for Nigeria. Remittances constitute a lot of receipts, even more than oil revenues. So if you assess it really, Nigeria actually exports human capital. If you look at what we get from remittances, I think there was a study that stated that in a particular year, we received about $18 billion from oil and gas revenues. But for remittances, it has been averaging about $25 billion consistently in the last 3 years. We expect that with the commencement of the Africa Free Continental Trade Agreement and the strong push for intra-African trade and integration, we are confident that the market will continue its sustainable growth.
Okay, Mr. Okejimi, thank you so much for your time and your input, and do enjoy the rest of your day.
Thank you very much, and thanks for having me.
Thank you. So now let's look at what's happening at the equities market. Eddie.
Good morning, Laddie. Well, the second trading week in the new year closed on a positive note, with the all-share index up by 2.63% to 41,176.14 points, while the equity cap added over 500 billion naira to 21.530 trillion naira. I'd just like to point out that last week, the market reached new highs both for the all-share index and the equity cap. Now, we saw a higher turnover of volume, value, and deals traded last week compared to the first week. We saw 3.44 billion units worth 32.72 billion naira traded in 30,327 deals. All the sectors were positive. Now, I'd just like to point out the market breadth was positive. We had 60 gainers compared to just about 19 losers. All the sectors which are positive. Banking was up 2.35%. As we know, we saw gains from, tier one lenders and other lenders last week. Consumer goods was up 3.11%. Industrial goods was up 2.84%, while insurance gained about 17.48%, while oil and gas was up 2.23%. But I'd like to talk to Rotimi Fakaijo, a stockbroker, to get more sense of what we should be expecting from the market this week. Good morning, Mr. Fakaijo. Thank you for joining us on the program.
Good morning.
Well, it's the first positive trading week in the new year. Like I mentioned earlier, we saw new highs for the all-share index and the equity cap. How long or how sustainable is this rally in the market?
Well, the rally will be sustainable as long as audited financial reports of quoted companies get to the market. So we may not see it as a straight movement. We may have some ups and downs, but ultimately we're going to still see a continuous trajectory for the market. And we expect that a lot of securities that couldn't actually perform in year 2020, especially the banking sector stocks, we're going to see a lot of good movement in them because of good expectation of their financial reports and also dividend payment. So we hope that the trend will not be truncated by any unusual government policy, either increase in rate or whatsoever. But given the market as it is right now, I think investors still has a lot of opportunities if they're just making a new entry into the market at this point.
I'm glad you mentioned policies now with inflation on the rise, the MPC meeting this week. What are traders expecting from that meeting?
Well, there is a lot of maybe postulates that because inflation rate is going up and therefore the NPR should also go up. But it may not really be far-fetched. We don't know whether CBN is going to yield to that pressure. So we are just sitting on the fence, expecting whether they will increase rate or they may retain it as it is. But whichever way it is, except there is a high leap of the NPR, for the NPR, it's only that we can see a reversal in what we have seen in the market. But given as it is right now, I don't really expect much from the MPC meeting to truncate the market, the good things happening in the market for now. So whatever way it is, as they will meet, I believe the market will still continually stand strong in expectation of audited financial reports.
Well, let's talk about sectors now. What sectors do you see driving the market this week compared to, what we saw last week? We saw gains in all the sectors, especially insurance. So what sectors do you think will be driving the market this week?
Well, I expect the banking sector stock to drive the market. And I don't think we've seen the last of the likes of MTN and Airtel. Likewise, the industrial goods. But I think the major driver for this week will most likely be the banking sector stocks. And I think GT Bank has suffered a lot of setback in price movement in the last 2 weeks. And I expect that investors are beginning to think wise. Although the dividend yield may not be as high as that of the Zenith Bank, but I think for the confidence that a lot of people hold in GT Bank, so it may actually bring back investors to give a boost to their investment in that sector. So if when a particular one begins to move up in that particular sector, we're definitely going to see a responding trajectory for the other ones.
Let's talk about company news now. Last week, Here's Holding, a core investor in Transcorp, announced the acquisition of a 45% participating interest in Nigerian oil license OML 17 and related assets. How much of a game changer is this for that company, and what impact will it have on, Transcorp, for example?
Well, I think we know fully well that Transcorp, as a group, has an existing oil block. And what we are seeing is an investment by Hair Holdings. Hair Holdings is a major shareholder in Transcorp, but Transcorp does not own Hair Holdings. So how the interplay will be is what we don't know. Transcorp already been in the oil and gas sector. Whether they're going to be the one that will anchor the investment for Hair Holdings, then that way is already a booster for Transcorp PLC. But if there are other parameters to it, then I don't know how much impact the acquisition of those oil and gas assets we have on Transcorp PLC. So we will watch it as it is. Maybe if there are more clarifications coming from Hair Holdings and Transcorp, then definitely we'll begin to see a lot of impact, the kind of impact it's going to have on the pricing of Transcorp PLC.
Just before we go to the opening calls, let's just talk a bit about the demutualization, which is ongoing now. I mean, a lot of people say that this will open up the market to dual listings. Right now, we have Airtel Africa as one of the stocks that's listed on the Nigerian Stock Exchange and the London Stock Exchange. Now, when this process is finalized, what stocks or what companies do you think might, take full advantage of the dual listing, for example?
Well, I think we've had a couple of Nigerian companies in dual listing, both here and the London Stock Exchange. I think it's going to be it's going to be far-fetched. You may see a company like Bois Cement actually going in that direction because of their size and because of the future of the company. We've seen Dangote Cement also making a foray into that direction. But I think we don't really have much of such that may go. But I think those, the ones mentioned, will definitely be the ones that will be the make the first attempt, even in this new season.
So what are the opening calls in the market today? What's driving the market at this time?
Well, the market presently is trading positive. And I think we are having a huge response from there is a bargain hunt for the market is even turned the other way now. We are seeing a downward trend. Initially, it was about 0.14% for the market, and at that time, GT Bank was the one driving the bullish trend. But for now, I think they are having a decline in the prices of Dangote Cement. And I think that is what has actually dragged down the market. But the GT Bank is still doing very well after this time, having gained 125 cover. So I don't expect that the drop in the price of the Dangote Cement may be sustained today. If it's not sustained, then definitely the market will continue on the bullish trend.
All right, Mr. Fakaijo, thank you for your input on the program. Have a lovely week ahead.
Thank you.
Rotimi Fakayojo is a stockbroker. Now, just like he mentioned last week, Dangote Cement was, the major driver of the industrial goods sector. Now, gains in that stock pushed the index up by 2.84%. So we'll just see how that plays out. Right now, at the unlisted securities market, the market was, the positive sentiment spilled into that market was up 0.91%. At 740.45 points, while the market cap was at 530.99 billion naira. We saw about 5.13 million units, which is a lot. That's a lot that we've seen in the market lately, worth 82.37 million naira, traded in 25 days. Well, right now, investors, are looking forward to or, waiting for the dividend payout. They're, expecting financial results from banks, consumer goods, industrial goods, lots of these listed companies. So hopefully we should be seeing some positive sentiment up until that period. Well, Laddie,
yeah.
I'll have to stop now for the
well,
equities
I guess
market.
it's fingers crossed for me. We'll see how it plays out today.
I'm sure Chimi is, Chimi has been happy with the way the market has been
she's
moving.
been excited.
So
Really, I was listening to hear perhaps Rotimi would talk about how MTN and Airtel are behaving, at the moment, considering the deadline for this NIN registration thing. Of course, that definitely is going to impact some of these telecom sectors. And I guess, Eddie, that's something you have to keep an eye on.
I will. I sure will.
Anyway, we'll take another quick break now. When we come back, we do an opening call to London. Just stay with us.
Well, it's a beautiful morning here in Nigeria and, of course, in London. Let's see how the day is kicking off with Juliana Olayinka. Good morning, Juliana. Good to see you. A beautiful morning to you.
Good morning. Nice to see you, Chimaze.
Well, people in England, aged 70 and over, as well as those listed as clinically extremely vulnerable, will begin receiving offers of a coronavirus vaccine this week. Meanwhile, the UK has also now closed its travel corridors until at least 15th of February to protect against as yet unidentified new strains of COVID. It's Monday morning. How have the new week opened up, and what soundbite are you getting about these?
Well, we've got a slight glimmer of hope here in the UK. Of course, there's been so much coronavirus death and misery over the past couple of, it's almost been a year now. But the vaccination rollout is going successfully. Currently, we've given the vaccination to almost 4 million people, including the Queen and Prince Philip. And now we've moved on to the second stage. So this week, the over 70s and the most extremely clinically vulnerable are being invited to take the vaccination. I believe it's going out to about 5 million people. Over the weekend, the Foreign Secretary, Dominic Raab, the Health Secretary, Matt Hancock, as well as senior NHS staff have really been speaking on the British media, telling people, particularly the anti-vaxxers who are afraid of taking the vaccine, that this is our only way of escaping lockdown. There was lots of talk about February the 14th potentially being the day when we can all be released, but sadly it doesn't look like that's going to be the case. It's more likely to be March, but the government are doing whatever they can, and apparently at the moment 140 jabs are being given every single minute. So that's a piece of data that Boris Johnson is pretty happy about. But as you said as well, today at 4 a.m. this morning, local time, the travel corridor has been completely scrapped. So before, if you were from an area across the world, a region that had very low COVID rates, you could come into the UK and not quarantine, as well as there were other exemptions. I know just before Christmas, the Transport Secretary, Grant Shapps, also said if you were doing business or if you were a senior, a sports person, you wouldn't have to self-isolate. You'd have to now, as well as taking this PCR test within 3 days of travel. So if you are coming into the UK, if you don't have a PCR test that shows you are negative, you will be fined £500 and you must self-isolate for 10 days. However, if you are willing to pay for a test, then you can come out of isolation after 5 days if you test negative. The government, of course, are trying to do that as death rates here in the UK have reached over the 82,000 mark.
And last week, Friday to be precise, you talked about a couple of data expected this week, and there are Are there any expected today? What are on the radar for the markets?
Nothing much today. Lots of the economists are all talking about China and how they've done spectacularly well in the last quarter of the year. Their GDP is soaring, and of course, everybody is hoping if it's happening for the world's second largest economy, then perhaps it can happen for us. So the FTSE 100 opened pretty flat. It would have been negative if not for that positive China data we received overnight. And as you said, yes, it is a pretty busy corporate news week here in the UK. Two major economic dates in the calendar for us. One is the inflation data that's expected on Wednesday. This is for December. Inflation currently stands at about 0.3% here. Very, very low. The Bank of England have pegged it at 2%. The forecast is that it's going to be about 0.6%. But considering in December, retailers were desperate to get a lot of their stock that was left in the November lockdown off their shelves. There were lots and lots of sales. I know I grabbed some bargains, so who knows if it's going to be at that rate. And then most importantly, we've got the flash PMI data on Friday. Now, the PMI is a very, very important indicator of how the private sector has been going. The last PMI data we had in December wasn't that great, particularly for service. Britain is a service-based economy. 80% of our GDP comes from there. So we'll be keeping a close eye on services. It was at 49.4, bearing in mind 50 is the threshold for expansion. Economists have it pegged at 45.1. If it does come at that, then we can certainly be seeing that we are heading for a double-dip recession. And on Friday at 5 p.m, we're having a statement from the Bank of England Governor Andrew Bailey. Who knows what he'll be saying then?
Well, while we keep an eye on those data and, of course, the statement from the BOE, a benefit vote is up today, and Labour is expected to ramp up the pressure on the government to prolong the universal credit uplift. What about £1,000 a year beyond 31st of March? Does the PM really have a choice here?
Well, he has a choice, but he doesn't really have a choice. You know, we know that so many, in fact, millions of families are living on the breadline here in the UK, especially children that are out of school. There have been so many reports about children that literally have been going missing. Their parents don't have access to the internet. They don't have access to be doing online schooling. We also had a massive national campaign last week because lots of children that are receiving homeschool meals or free school meals, as they call them. Pictures were being sent on social media just showing just how bad these school meals are. So the government are under a lot of pressure. Hundreds of thousands of people have lost their jobs, and there are some that are saying the government aren't doing enough. Now, this plan to cut or reduce the amount of universal credit, which is a benefit that some families receive, was to take place in April. It is only £20 a week, but as you said, that calculates to about £1,000 a year. Labour and the Resolution think tank are really not happy about this, and they do think that Boris Johnson is pushing more people into the brink of poverty, especially as it will be cut at the same time as the furlough scheme will be coming to an end. There will be a vote today in the House of Commons. Boris Johnson, the Prime Minister, has asked his MPs to abstain, not take part in the vote. A lot of people are not happy about that. In fact, there are some whisperings that there are some rebel backbench Conservative MPs that will participate in the vote. So Boris Johnson is under a lot of pressure. There have been some fantastic U-turns over the past couple of months. Will there be with this one? It's pretty likely, considering we are talking about £20 a week. But £20 a week, if you don't have that, really, really, really is a lot of money. So let's see. It's going to be another busy day in the House of Commons, and for us, as it always is, Chimmy.
I really don't envy his office at this time. I'll see you later, Juliana.
And for the debt and currency market, back to you, Eddie.
Thank you, Ned. Well, just before we talk about the debt markets, let's just talk about the currencies markets. And I'm being joined by Bosun Obimbi, a fixed income and FX dealer, I beg your pardon, at Access Bank. Good morning, Bosun. Thank you for joining us on the program.
Good morning. Thanks for having me.
Well, it's a packed day for the fixed income and currencies markets, from the first MPC meeting of the year to the first bond auction of the year. But what are your expectations from the MPC meeting?
For me, we are still the government is still working on how we can exit the recession. So my expectation is the rate will be maintained. So I expect all the parameters to be maintained. And in terms of the first bond auction that you mentioned, so we have a bond auction on Wednesday, 50 billion each on 2027, 2035, and 2045. So there has been expectation that rates will actually go up, but when it will go up, is expectation is maybe by second quarter or the end of first quarter to go up. And given the inflation rate that came out last weekend, where we saw a 6 basis point increase month on month, so I expect that the 2045 there will be an increase in the stop rate. The bond is currently trading at 8.6 level, so I expect it to clear at close to 9%. I expect an increase in all the three maturity on offer. Also, on the FX space, I still expect the liquidity to actually persist because the offshore, they are still not bringing funds. The major driver of the FX has been the CBN. All through last week, there was no intervention in the investment and export window by CBN, so we didn't actually see flows. But we expect that CBN will continue to intervene in the market and ensure that the rate is at the appropriate level. So I expect liquidity to persist in the investment and exporter window, though rate will still be at sub 400 levels. And in terms of the bond, like I said, I expect the rate to actually go up, even though it's still a negative real return to investors.
All right, Bosun, thank you so much for your input on the show. Bosun Obembe is an FX dealer at Access Bank. Now, just before I go back to Jimmy and Ladi, the fixed income market was mostly bearish last week. The bond market has continued, with the increase in yields. The Nigerian Treasury bills market is still relatively flat with yields at, minimal levels, while the CBN special bills market has just been there. So, Jimmy and Ladi, that is on the market review today.
Yeah.
Thank you, Eddie.
Thank you.
And I would want to have an update on the cryptocurrency market.
Oh, yeah,
Any update
I
on
was
that?
wondering, I thought your interest had, Anyway, Bitcoin is...
for the market's sake.
Yeah. Anyway, Bitcoin is stable at 35, but other assets, those are the altcoins, are surging. So traders are talking about an alt season. So we'll see how that plays out.
I think I have a lot to learn from you guys. All right, that's it on the program. Thank you for watching. I'm Chimezie Obi Iwago.
And I'm Ladi Williams. Thank you for watching.